Emerging markets will end the year lower. China's major stock indices down 20%. Philippines and Indonesia, though, on the other hand, ending the year with single-digit gains. And they are among the favorite places to invest of our next guest. Joining us right now for our final Going Global segment this week, Howard Schwab is with us now. He is a portfolio manager of the Driehaus Emerging Markets Growth Fund. It is a Bloomberg best for emerging markets. Howard, thanks for being with us here on Street Smart. What is it that you like about the Philippines, about Indonesia, that you think makes those places worthy of investor money?
Sure. Thank you for having me. With both Indonesia and the Philippines, we see a very strong structural backdrop in terms of structurally lower inflation and also a very strong tailwind with regards to demographics. Looking at the Philippines, for example, you have an average median range of age of 22 years. You have the market growing for consumption about 40%. You also have political stability with President Aquino recently having taken office. And you also have a fiscal surplus coming in 2012. Less than 5% of the population is of age above 65 years. Indonesia has similar demographics as well. You have credit penetration of just 8% in the Indonesian market. You have an average age range of 28 years in Indonesia. You have 40% growth in the middle income between now and 2020, at which point 60% of the Indonesian population will be considered middle class. So clearly a very strong tailwind for consumption driven by demographics and, again, the structurally lower inflation. And in both cases, you have a very healthy credit system with credit penetration as a percentage of GDP being less than 8%.
Howard, you mentioned, especially with Indonesia, this growing middle class. It's actually a problem in the Philippines as far as the disparity of wealth. What should investors consider if they are going to look into putting money to Philippine companies?
I think in regards to the Philippines, the key is really fiscal reform. And with the incumbent President Aquino, we have seen appropriate measures taken to improve the political process. And again, that's manifested itself through the the budget surplus, which we will see in 2012, coming on the heels of a budget deficit over the past several years. A predominant driver of that has been the fact that corruption has diminished under Aquino's lead. And you've seen that in the case of tax revenues, where tax leakage has actually been reduced quite extensively. And I think as you see this wealth spread through the Philippine market, and again, this is being driven by the Philippine banking sector, where you have extraordinarily low credit penetration, again, the lowest within all of Asia. And again, you have structurally lower interest rates. This contributes to a robust consumer cycle, will help both the middle class aspirations as well as areas like property and consumer cross-selling.
So Philippines and Indonesia, Howard, you say have moderate inflation, controlled inflation. That is not at all what I understand to be going on in Thailand, but yet you still think that's a good place for money.
Thailand, we would rank third behind the Philippines and Indonesia. Thailand does have a risk of inflation going into 2012, driven predominantly by the populist measures which the new government, which was elected in the fall, has implemented. We would agree that there are intermediate-term risks on the inflationary front for Thailand. However, that said, the populist policies have been extraordinarily powerful in driving rural consumption in particular. And we do have holdings which actually offer exposure to that rural phenomenon. A company such as CP All, which operates 7-Elevens and convenience stores within Thailand. And despite the fact that we have seen very strong consumption, the consumption levels as a percentage of GDP on the convenience level are roughly 1/3 for Thailand compared to markets such as Japan and Taiwan and elsewhere within Asia. So it's a good point, but there are also opportunities that circumvent that theme.
Howard, thank you so much for the time, for sharing your opinions on investing there. As we just heard him talk about, you have Thailand, the Philippines, and Indonesia as 3 places to consider your emerging markets money. Well,